Now, I want to briefly look at bookkeeping. And bookkeeping is the act of recording business transactions in twofold. In twofold mean there's two accounts which are involved in recording accounting transactions. This involves one account giving out, another one receiving. Or we give out money through on an account, and then also receive money by a certain account. Now, this is essential in business for us to be able to know what we incurred and what we received. From this, we can be able to ascertain if the business has generated a profit or incurred a loss. That's the essence of business. That any person going into business wants to generate some income, and that income is a profit. So it may happen, unfortunately, that we may incur loss, but always we target generating a profit. So, like in economics, we always say the incentive of an entrepreneur is the profit to be generating. So, go into business to generate a profit there. So, bookkeeping involves having to keep books of accounts, and we'll be looking at various books of accounts that there are that we always record our transaction in. There are other supporting documents that come with them, that whenever transaction takes place or any business dealing takes place, then there are some documents which will be involved. Some of these documents are invoices, vouchers, and receipts. So these are used to record transactions in our books. So the receipts, invoices, and vouchers are prepared by the cashiers, and then the accountants or bookkeepers use them to record in the books of accounts. So I've been listing these types of books of accounts that we have, but normally they are classified into various classes. We have those which we talk of as assets, and we have those which we talk of as liabilities, and those which we refer to as expenses. And then you also have incomes, revenues, and provisions. So all these are types of accounts which we're looking at and how we record transactions in them. Now, the assets are those items which are owned by the business. Items owned by the business are also referred as assets. In the most current language, we refer to them as either current or non-current assets. So, asset examples are vehicles, buildings, land, furniture, machinery, and other like goodwill, mines, and all those which the business owns. Now, liabilities are those claims against the business. Anything that is claimed by outsiders against the business is considered to be a liability, meaning there's something that the business took from someone or a customer or any other person that have not been paid back or given back to the person. Those are considered to be liabilities. And then the other thing are expenses, and the expenses are accounts through which we pay out money. And these expenses are always meant to help run the business. So you always say that we incur expenses so that we can generate an income. So an example of an expense is rent. So rent is an expense through which you pay out money to get a premise to use for doing business. So it can be an office, it can be a factory, it can be a warehouse. Any of those, whenever we hire or rent from a person, then we shall be paying that person either annually or monthly. So if it's annually, we consider it mostly as a lease amount. But if it's monthly, we talk of it as rent. So both of them are expenses which help generate income. Meaning you use it to produce your items, or you use it to render a service, then because that will belong to the business. I've given an example of rent. Then we also have an example of salaries, which actually pay money to persons who render services. They provide labor, human effort to the business that you're running. So those persons who come to provide the human effort to the business are what we talk of now as laborers, and we pay them a fee, which we talk about salary or wage. So a salary is for persons who are on permanent terms, and then wages are persons who are on temporal grounds. Now, incomes. Incomes are accounts through which we receive money. These are accounts which money through them come to the business. So the examples of income here can be commissions, where you sell items on behalf of another person, and then he pays you something in return for doing that for a business. That will be an income which you talk as commission. So that's one of them. You also have like discount receipt, where you buying items and then the seller agree with you that he'll pay you or you'll pay that person a certain amount less the price, which is the market price. So that difference there will be considered to be a discount receipt, which is an income to the business. So through them we receive money, refer to them as incomes. And this one are considered to be annual, meaning they are revenue, meaning they are not, we don't expect money to be received over years. It's actually within a certain period, a year, to receive money to them. Those are incomes. You have losses. Losses, as I said, are considered to be part of expenses, only that they're unique because they arise out of having done some business for some time. Instead of gaining, you lose, which is merely an unfortunate situation that instead of gaining, you are losing. So that loss there is what we consider to be also an account which is part of the effort to generate an income. So you can never be sure that you always gain or make a profit. So in case you don't generate a profit, don't incur loss, or you don't actually miss any of those, then you say you've incurred a loss. Meaning whatever you're selling is less, a price is lesser than what you bought the item, or you incur more expenses which consume the entire gain you have earned. It's caused by a loss. Revenues. So revenues are money which you always say are set aside or come out of a certain activity that has taken place. So revenues are just like in other incomes, only that they're classified slightly differently. I'll be explaining that. Also an expense. And then you have to talk about provisions. So provisions are money set aside to cater for a particular anticipated expense. So you're anticipating the current expense, then what you do, out of the profit you generated this year, you set aside some money to cover that expense which is likely to incur, and that will be considered to be a provision. So also we have what we talk about reserves. And reserves are money set aside to cater for an unknown expense to be incurred. You're planning to buy a motor vehicle next year, which is not an expense, an asset. Then you set aside some funding every year, so that next year when it comes, you have money there to be able to acquire that vehicle that you want. So that is considered to be a reserve. Now, contrast to this, we have what we talk about as equity or capital. Now, capital is an amount which one injects into the business. So you have 1 million which you decided now as you want to be an entrepreneur, meaning you want to invest it in a business or a project so that it can generate for you some income, some wealth. Then that money, if you decide to put it in the business, then it's referred to as capital or equity. Capital is that amount you use to start the business. Now, over time, this capital will be generating some income to talk about profits, and over time, if this profit you retain in the business, then it increases your capital, which turns out to be now what is in the business, which we refer to as equity, meaning the worthiness or the value that is in your business. So we always say capital at any time will be considered to be the value of the assets that you have minus anything that belongs to an outsider. Then that will give us what we call as now equity there. So we'll be having also what we call as drawings as an account also on the other side, which represents whatever you withdraw or remove from the business for personal use. You've invested 1 million, but in the course of the year you remove like 40,000 to go and use on your private endeavors. Then that is what we call as drawings. I will withdraw for personal use. So what we call as a drawing. So that's also another account which you are looking at and how it's treated. So I've just mentioned here that equity is considered to be the difference between the assets of the business and the liabilities. We've said whatever is owned by the business is the asset. Whatever belongs to the outsiders is the liabilities. So the difference between all the assets that the business has and anything that belongs to an outsider is what covers now equity or capital for that matter. So we shall be saying that when you take the assets minus the liability, you give us capital. And also, on the other side, when you take the capital, whatever you've invested in business, and minus the liability, then you remain with the assets which are in the business. The same way also, if you take the capital that's in the business and minus the assets, whatever difference will come there is what we call now as liabilities. So that's what you have. Otherwise, when you talk of an account, because I've talked of an account on several occasions that you'll be looking at this, what these accounts are. So it's actually a record of a transaction in the business and always resembles a capital T. A capital T. I'll be mentioning that when it comes now to the computation. But today I'll be looking at the theoretical part of what accounting, the reduction part of bookkeeping and accounting. So when you record a transaction that took place, accounting is all about what happened. So when you record what happened, then that's what you talk about now, an account. And that account will have a form or will appear in like a capital T. Capital T. And that actually what you'll be seeing now. You'll be seeing that this account here or this account here will be opened or will be drawn or be formed in a book. So you take a page in a book and then you draw a T there. One side will be left side or ventricle, and then the right that side which will be actually the right ventricle. But now, when recording the transaction in this account, we have the options of recording on the left side and also an option of recording on the right side. So that forms what you talk of as an account. So each transaction will always have recorded twice. Meaning now, when we draw these accounts, we shall have each transaction having two accounts when recorded. Meaning you can never record in one account only. That's one thing that is very clear or very unique with accounting, that when recording, there has to be two accounts being recorded for each transaction. Now, a transaction is where like you bought item for a sale worth 1,000. That's a transaction complete. A dealing between the seller and the buyer where goods which are worth 1,000 were exchanged for cash between two people. So such is a transaction which has to be recorded in two accounts. And now in recording this in two accounts, that the two accounts, they appear in a T format, both of them. So one entry will be made on one side, that's the left side of one account. And then another record of the transaction will be made on the right-hand side or the other side of the second account. Meaning you don't record in one account the two entries for a single transaction. It has to be one entry in one account on one side, and then the opposing entry should be in a different account, the second account on the other side. Let's talk of now as bookkeeping or double entry. So I'm bringing up the term double entry, meaning you have to record the transaction twice, double recording. So and that double recording has to be in two separate accounts. Now we shall be answering why, which are these two accounts that shall be recorded. That you may have, like in the purchase of goods for cash, worth 1,000. Then the two accounts there, briefly, will be the purchases account and the cash account. So one account will be recorded on the left-hand side, which is the purchases, and the other account will be recorded on the credit side or the right-hand side, which will be the cash account. So the left-hand side of an account will refer to as the debit account, debit side, and then the right-hand side of an account is the credit side. So that's it. But I want to come back